Not all online businesses are created equal. Some generate quick cash that disappears the moment you stop working, while others build compounding value that pays you for decades. The difference between a glorified job and a real asset comes down to the business model you choose. Today, we're breaking down how to evaluate online business models for long-term returns, the frameworks that separate sustainable wealth from digital hustle culture. This could save you years of building the wrong thing. Hit subscribe and let's dive in. 1. Understanding business model fundamentals. A business model isn't just how you make money. It's the entire system of how you create, deliver, and capture value. The best online business models for long-term returns share critical characteristics: scalability without proportional cost increases, defensibility against competition, recurring or predictable revenue, and the ability to eventually operate without your constant involvement. Too many entrepreneurs chase revenue without examining these fundamentals. These questions determine whether you're building an asset or just creating a demanding job with flexible hours. 2. The scalability test: revenue versus time. The fundamental test separating valuable business models from glorified freelancing is scalability. Can revenue grow without proportionally increasing your time investment? Service businesses typically fail this test. If you're trading hours for dollars through consulting, coaching, or done for service work, you're fundamentally limited by available time. Doubling revenue means doubling your hours, which is impossible beyond a certain point. When evaluating any online business model, map the relationship between revenue growth and time investment. If the graph shows a linear relationship where more revenue always requires more time, you're building a job. If revenue can grow exponentially while your time investment flattens, you're building a scalable asset. 3. Recurring revenue. The multiplier effect. Recurring revenue is the single most powerful characteristic for long-term business returns. Yet most online entrepreneurs ignore it in favor of one-time sales. Here's why recurring revenue matters. It compounds. In a one-time sales model, you start every month at zero and must constantly acquire new customers just to maintain revenue. Software as a service exemplifies this perfectly. Each new customer increases monthly recurring revenue that continues until they cancel. This means a subscription business generating $100,000 annually in recurring revenue might be worth $500,000 to $1 million, while a one-time sales business with $100,000 annual revenue might be worth only $100,000 to $300,000. When evaluating online business models, ask, can this naturally support recurring revenue, or am I constantly starting from zero? 4. Margin structure and unit economics. Beautiful top-line revenue means nothing if your margins are terrible. Unit economics, the profit you make per customer after accounting for all costs to acquire and serve them, determine whether a business model creates wealth or just churns cash. Advertising-based models can be lucrative, but depend entirely on traffic volume and advertiser demand. The best long-term business models combine high gross margins with reasonable customer acquisition costs. When evaluating any model, calculate the full customer lifecycle economics. If you're spending $150 to acquire customers who generate $120 in lifetime value, you're building a machine that destroys money regardless of how impressive your revenue looks. 5. Competitive moats and defensibility. A profitable online business attracts competition instantly. Long-term returns require defensibility, something that prevents competitors from easily replicating your success and stealing your customers. Strong business models build natural moats. Network effects create moats where the product becomes more valuable as more people use it. Think marketplaces, social platforms, or communities where participants come for access to other participants. When evaluating business models, ask honestly, what prevents a well-funded competitor from copying this and stealing my customers? If the answer is nothing, you're building on quicksand. The best long-term businesses have multiple reinforcing moats that strengthen over time. 6. Content versus commerce versus software. The three dominant online business model categories, content, commerce, and software, Each offer different risk-return profiles and long-term potential. Content businesses monetize through advertising, sponsorships, affiliates, or premium subscriptions. They're relatively easy to start with low upfront costs, but face constant content creation demands and algorithm dependency. Monetization is challenging until you reach substantial scale, and competitive moats are weak unless you build a powerful personal brand. Commerce businesses sell physical or digital products. The best long-term strategy often combines models: building an audience through content, monetizing through commerce or software, and creating multiple reinforcing revenue streams that protect against single-channel dependency. 7. Automation and systems. The exitability test. A business you can't step away from isn't an asset, it's self-employment. Long-term returns require building systems and automation that allow the business to operate without your constant involvement. Customer acquisition through paid ads can be systematized. Content creation can be outsourced with proper creative briefs and quality control. Customer service can be handled by trained team members or chatbots. Product fulfillment can be automated or delegated. If a business model requires your personal involvement in revenue-generating activities indefinitely, it might produce income, but it won't produce long-term equity value. 8. Market size and growth trajectory. Even the best business model fails if you're operating in a tiny or declining market. Long-term returns require addressing markets large enough to support meaningful revenue and growing fast enough to create tailwinds rather than headwinds. Total addressable market determines your revenue ceiling. A business model serving a $10 million annual market can never exceed that total, and you'll likely capture only a small percentage. Creator economy tools expand as more people monetize content creation. When evaluating models, research market size, growth rates, and trends. Is this market expanding or contracting? Are there secular trends supporting long-term growth? A great business model in a terrible market produces mediocre results. A good business model in a booming market can generate exceptional returns. 9. Capital efficiency and time to profitability. Different business models require vastly different amounts of capital and time before generating positive cash flow. Capital efficiency, how much revenue you can generate per dollar invested, directly impacts long-term returns and risk. Bootstrappable models like content sites, digital products, and service businesses can reach profitability quickly with minimal capital, sometimes under $10,000 and within 6 to 12 months. Do you have the resources and runway? The best long-term business model is one you can actually survive building long enough to see returns. 10. The long-term evaluation framework. Putting it all together, evaluating online business models for long-term returns requires a comprehensive framework considering all these factors simultaneously. E-commerce scores high on scalability and market size, but lower on margins and defensibility. Content businesses score high on capital efficiency, but lower on recurring revenue and moats. The goal isn't finding the perfect model. It's finding the model whose strengths align with your resources, timeline, and goals while managing weaknesses intentionally. Choose the model you can execute successfully. That addresses a growing market, and that builds compounding value over time. That's how you generate real long-term returns. That's how you evaluate online business models to build real long-term wealth, not just temporary income. If this framework helped you think more strategically about what to build, smash that like button. Share which business model you're evaluating in the comments, and subscribe for more strategic business insights. Remember, the best business model isn't the trendiest one. It's the one that builds compounding value while matching your resources and strengths. Now, go evaluate and build something that lasts.